Welcome back, everyone. History just repeated itself, and this time it's getting embarrassing. Bitcoin has now been rejected at the $80,000 level for the third time in just 8 trading sessions. Let me tell you what happened again. On Monday, Bitcoin surged to a 12-week high of $79,488. The reason? Reports that Iran had proposed a new deal to reopen the Strait of Hormuz. Everyone thought, this is it, Bitcoin is finally breaking $80,000. But within hours, it all fell apart. Bitcoin crashed nearly 500. D O O P P I N G B L O W 500 dropping below 77,000. The result, $275 million in liquidations. Shorts got crushed on the way up. Longs got crushed on the way down. Nobody was safe. Today, I'm going to break down why this keeps happening, what the analysts are saying, and whether the fourth attempt will finally break the wall. Let's get into it. First, let me walk you through the exact sequence of events. Monday morning, April 27th, Axios reported that Iran had sent the United States a new proposal through Pakistani mediators. The proposal had 2 main parts. 1. Reopening the Strait of Hormuz. That's the critical waterway where 20% of the world's oil passes through. 2. Postponing nuclear negotiations to a later stage. The market loved this. Bitcoin ripped from around 77,500 T O asterisk 77,500 to asterisk 79,488 in just a few hours. That's a 12-week high. The last time Bitcoin was at this level was January 31st. Traders started celebrating. They thought $80,000 was finally going to break. But then reality hit. Here is where the story turns. Later that same day, at the United Nations in New York, U.S. Ambassador Mike Waltz and Iran's ambassador had a public clash. Ambassador Waltz said, quote, "Most countries are paying the price for Iran's hostage-taking in the Strait of Hormuz." Iran's envoy fired back immediately. He said, quote, "The U.S. is acting like pirates or terrorists, pointing to America's naval blockade of Iranian ports. No handshake, no agreement, no breakthrough." On top of that, President Trump canceled a planned U.S. delegation trip to Pakistan. His message was clear: we'll talk by phone, but we are not sending a team. Why? Because the United States wants to maintain its naval blockade. They are not ready to give it up. So where do we stand? Analysts are calling it a tense but non-escalating stalemate. And the market reacted immediately. Bitcoin dumped roughly 500 2,500 from 79500 down to below $77,000. The entire rally gone just like that. Now let me tell you about the damage. When you have a move this violent up 0 T H lead N D O W N 2000 then down to 500, the leverage traders get destroyed. And that is exactly what happened. $275 million in total liquidations across the crypto market in just 24 hours. Let me break that down for you. When Bitcoin was pumping to 79,500 asterisk 79,500 asterisk 140 million in short positions asterisk got liquidated. Those were traders betting against Bitcoin. They got crushed on the way up. Then, when Bitcoin crashed back down, long positions started getting wiped out. Early estimates show over $100 million in long liquidations. The result, both sides lost money, the shorts lost on the way up, the longs lost on the way down. This is the third time this pattern has played out in less than 2 weeks, and each time, leveraged traders get hurt. The market is teaching a very expensive lesson. Now here is where things get interesting. The analysts are completely split on what happens next. Let me give you both sides. First, the bullish view from Mike Novogratz at Galaxy Digital. He says, quote, U.S. retail investors have returned to the market. The combination of retail demand, institutional capital, and limited supply creates the foundation for further upside. And the data backs him up. Whales accumulated more than 40,000 Bitcoin over the past 2 weeks. That's over $3 billion. Strategy Incorporated, formerly MicroStrategy, bought. And spot Bitcoin ETFs saw $2.5 billion in net inflows in April. That's on pace to double March's numbers. Now the bearish view from Kai Youngju, the founder of CryptoQuant. He says, quote, Bitcoin's push above $79,000 was driven primarily by a short squeeze in the derivatives market, not sustained spot demand. Large-scale short covering leaves the market vulnerable to a reversal. And here is his evidence. Funding rates on perpetual futures remain negative on a 7-day basis at -0.13%. That means shorts are still paying longs to hold positions. He believes the move up was a liquidity grab. The price pushed higher to trap late buyers, then quickly reversed. Once sellers stepped in, leveraged longs got caught on the way down. So who is right? Both sides make compelling arguments. So here is my final takeaway. Bitcoin has now been rejected at $80,003 in just 8 trading sessions. Each time, the same pattern: pump on Iran headlines, dump on reality. $275 million in liquidations, both sides losing money. Let me know in the comments below. If you found this video helpful, please hit that like button, subscribe to the channel, and share this with someone who needs to hear it. I'll see you in the next video. Trade safe. Bye.